So Jack, AZVC, what is it, and what is a nice PayPal co-founder doing here in Arizona? Why Arizona?
So I moved to Arizona when we sold PayPal to eBay in 2002. I wanted to get out of the onerous tax regime of California, and my dad had moved us here as a family when I was a senior in high school. So I started coming here in the summers in between college and fell in love with the place, even though it was hotter than Hades. So I had a familiarity with it, and my dad lives about 5 minutes from here. My younger brother ostensibly grew up here, so it was an easy choice for me to make.
So you are making investments in largely Arizona entrepreneurs?
Right, so we put together this fund called AZVC, which is a $110 million venture capital fund. It's focused on Arizona. So we're looking at Series A opportunities that are here in Arizona.
Is it, as you look at companies and look at people, which is more important, the entrepreneur, the person, or the business idea?
That's a very easy question. It is always the jockey, not the horse. Because if you invest in a business plan, that business plan, like when we were doing PayPal, we pivoted multiple times. But if you invest in a bad person, however you want to define that, that's very difficult to recover from. So for me, I'm always looking for rock star entrepreneurs. Again, the jockey, not the horse.
The jockey, not the horse. Is this a good time? I think I've read that you feel that this is a time where some great companies may emerge. That it's like some earlier eras where great companies bubbled up, whether it was eBay or whatever.
This is a fantastic time to invest. The primary reason is that human capital, which is the most important ingredient for any startup, is very mobile now. And so if you were trying to hire world-class engineers 3 or 4 years ago, trying to pry them away from Google or from one of the hot startups, that would have been very difficult. But now, given that we're in an economic downturn, trying to bring together human capital to start the next PayPal or the next Google is far, far easier. And plus, the valuations are a lot lower.
You said economic downturn. Is that what you feel?
Well, I think it's a cycle, and I think for tech, we peaked. So tech peaked in 2021 in terms of valuations, right. Private tech, and now we've been coming down. And so now, as we're in the down bit, this is a great time to invest from a valuation perspective.
From a valuation perspective,
yes.
Where are the businesses that seem the best? Are they in technology? What are they? FinTech, MedTech, what?
So the Arizona tech ecosystem is still a bit nascent, and so this is a very good question, but honestly, I think I can answer your question in 5 years once we've deployed our fund and we look back to see what sectors we've allocated to. Because as you asked earlier, I'm just looking for rock star entrepreneurs. And if I can wrap my head around what they're doing, regardless of sector, then we'll take a look.
How do you judge them? You said that bet on the jockey. How do you know or suspect that a person is the right jockey?
So I have a bias. It's not dogmatic, but I have a strong bias in favor of people who've been an entrepreneur before. So even if you've failed as an entrepreneur before, at least that proves to me that you have it in your DNA to be an entrepreneur, because when you're out starting a business, you're going to have near-death experiences, and those can be very rattling. And so for a first-time entrepreneur, I don't know how that person's going to react when the bullets start to fly. Do they walk out off the battlefield with the white flag hanging high? I don't know. And so that's a difficult risk to assess. And plus, you're also signing up for almost being a chaperone or a babysitter when you invest with first-time entrepreneurs.
To be an entrepreneur, you have to have a tough skin, and you have to be ballsy.
You have to be resilient. And resiliency is an incredible skill to have, and you really need it as a successful entrepreneur.
When you find a company that you want to invest in, how does the process evolve? How do you judge the company, the entrepreneur? Are you looking for companies that are going to be moonshots, big, or do you what?
So the nature of venture capital is that you're going to have, so if you have 10 investments in your portfolio, some of them will be zeros, they'll be bankrupt. You'll have a couple of middling outcomes. But the way that you make money is by having really big outcomes with your successful investments.
And those might be what, 1 or 2 out of 10?
Ideally more than that, but yes, at least. But you have to, so for an entrepreneur to take venture capital money, they need to have a very grandiose, ambitious game plan of what they want to do with their company. And if not, then maybe they should go to their local bank and get a loan, because it's not a fit for venture capital money.
Yeah. You are part of what is often described as the PayPal Mafia. You were one of the co-founders. Who wasn't a co-founder of PayPal? I wish I was, but there were a lot of people like you who were in that orbit ecosystem. What did you learn there?
So I was merely employee number 11. I ran the corporate international operations at PayPal, and it was an amazing experience.
That's close enough to be a co-founder, employee 11.
And it was actually a very short period of time from the start of the company to when we sold it to eBay. It was about 3 years. And so it was like earning 10 plus MBAs in such a short period of time. And going back to what we talked about earlier, we had so many near-death experiences where we had to make these pivots from one business model to another. And we were very lucky, I have to say, at many of those points.
Let's talk about a couple of the personalities that were there, and you have intimate knowledge of how they work, what you learned from them. Peter Thiel,
Sure.
What'd you learn from him?
So I was fortunate to meet Peter when I was 24 years old. And so my joke to my friends is that the one semi-smart thing I've done in my life is that when I met Peter, I realized I'd met a very, very, very smart person. And I vowed to hold on for dear life. And if you fast forward 25 years later, I'm still holding on. It's an amazing blessing.
And you work with him and his family office or his fund? Or?
So I'm a managing director at Thiel Capital in Los Angeles as well, another hat that I wear.
Another hat that you wear. Elon Musk.
Just probably the most talented entrepreneur I've ever met. An amazing entrepreneur, amazing leader, just a truly brilliant guy.
He is a controversial guy. There are stories in today's paper about drug use, about things that might make an investor nervous.
Well, I can't speak to that, but what I can speak to is that I actually own the rights to the PayPal book that was written by Jimmy Soni called The Founders. And so David Sachs, who was our COO at PayPal, he and I are developing the book to turn it into a film. And we hope to tell a very proper story about people like Peter and definitely Elon.
Proper?
Yes.
What does proper mean?
Well, I think
that doesn't mean sanitized.
Well, no. I mean, it's going to be. I mean, Jimmy did an amazing job with the book. I mean, I think he spent 5 years writing the book. He interviewed over 400 people, so it's really well documented, very well researched, and we just want to make sure that the story is properly told.
Would you feel, back to Musk, and I don't mean to probe this too hard, but I must. Would you feel comfortable as an investor putting money in his companies if it turns out that there is truth to the stories about potentially the use of recreational drugs?
Well, listen, I worked with Elon for 3+ years when we were at PayPal, and so I know him quite well. I don't talk to him that much anymore, but I know what he's like as a person. He's an incredibly talented and dedicated entrepreneur, and he's literally a guy that works 24/7. So I don't know how you could work 24/7 and have bad habits as that they're claimed.
Let's talk a little bit more about the idea that you said this is a great time to invest in some nascent companies. What makes it so? Is the IPO pipeline, for example, that was very sparse last year, going to rekindle as interest rates come down? What?
Well, I don't know if interest rates are coming down, and that's a more broad macro discussion, which I'm happy to talk about. But I think what I tell entrepreneurs is to think about Mark Andreessen's manifesto that he wrote last year and pair that like a wine pairing with Howard Marks's most recent memo that talks about kind of this new interest rate environment that we're in.
I read that, yeah.
Yes, so interest rates are at 4 to 5%. It's actually more normal than not. And so if that is going to persist, what does that mean for technology and investing? So I'll give you an example. So during the 13 years after the great financial crisis when money was so easy, entrepreneurs could take money from venture capitalists, and it was almost like a zero coupon bond in the sense that you give the entrepreneur the money, they go away for 10, 15, 20 years, and then maybe they come back and they have a SpaceX, or maybe they don't. The tolerance for that type of investing now, when interest rates are 4x, 5x of what they were, is far, far reduced.
Let's talk a little bit about one of your other passions, and that's filmmaking. How is what you have done and learned from backing nascent ventures similar to or different from backing a movie? Because there the hit rate is, I don't know, maybe it's the same. Maybe it's 20%. Maybe it's 2 out of 10 that really make it. You've had great success with the Jessica Chastain movie in the last year. Congratulations, by the way.
Thank you.
But how's it like the venture capital business, and how's it different?
So that's a great question. So a joke I like to tell my venture capital buddies in terms of how to compare the two different businesses is that film is very similar to venture capital in the sense that you have the same probability of having a zero, like we talked about earlier, and then your winning outcomes have just a far, far lower ceiling. So as an example, Peter put $500,000 with Mark Zuckerberg in the early days of Facebook that turned into $1 billion plus. Yeah. There is no analogy to that in film.
That ain't happening in film.
Never, ever, ever, ever.
Yeah. Yeah. So you look at the hit rate, and the ceiling is very different.
It is, and I have two trusted business partners that I've literally known since third grade. I grew up with these guys, and so to be able to work with people that you trust implicitly gives me a huge advantage.
Yeah.
And so I realize that we're going to make mistakes, but we're also proper adults. I turn 50 next week, and so we're in it to make money. And hopefully we can make good films in the process, like the Jessica Chastain film that you mentioned, Memory. That film actually won Best Actor for Peter Sarsgaard at Venice this past year. So I feel like we're making good quality films.
Yeah. Jack, thank you so much.